Good evening, students. Welcome to Excel Academy's YouTube channel. So here we are. Students, welcome to Excel Academy's. Here we are with another live session, and this session would be on economic and business environment. So there is a comment that has come, sir. Can you teach in English, please? Yes, Gayatri, the session would be in English, and Excel Academy is one of the academies that teaches in English, and there are no other languages that we use. So from whichever part of the country you are, you should be able to follow. Please have no apprehensions with respect to that. Good evening, Pujita. Good evening. Welcome to the live session. So before we begin the session, let me just give an introduction to Excel Academy, if in case you are new to the academy. So Excel Academy is a 10 years old academy now. So we have been teaching, training, coaching, mentoring the CS aspirants for 10 years now. So there are a good number of CS Excel Academy has produced. So it is one-stop destination for all the company secretary courses. When we say one-stop destination, because we conduct the classes for CSEET, CS Executive, as well as for the CS Professional course. So our aim is simple. It is to foster comprehensive learning and inculcate requisite skills in becoming the top-notch company secretary. So this is what we deal with. In our academy, we just don't focus on the exams. Apart from that, there are a lot of other things that is done. And it's all posted on YouTube channel to benefit the CS aspirants. For example, every week there is a program called a program where a practicing company secretary is interviewed. It's called the World of Company Secretaries. So this program has been wonderful. We have had the interview with the Reliance company secretary. We have had the chairman of ICSI coming down and giving an interview on this channel. And we have had many wonderful company secretaries coming from different sectors, coming and sharing their views and sharing their inputs with the CS aspirants. Along with that, there are a lot of personality development courses and communication, vocabulary, language improving sessions that have been conducted on our channel. Right. And the next thing is, along with that, every week we release something called the current affairs update. We try to cover all the important things that has happened in the world of business. And this is done keeping in mind the CSEET aspirants, because one part of your CSEET exam focuses on current affairs. So that is why we call it as a comprehensive program that is designed for the CSEET aspirants. And like I told you, it is one-stop destination, because from CSEET till CS Professional, all the exams coaching is extended by the academy. So what are we best known for? We have video classes, and all the video classes are in English. Okay. So here it's Sumati says, okay. So Sumati, you had asked to have, so Gayatri had asked, can the class be in English? So here we are, the classes are in English. All the real-time examples are given, whatever is happening in the business world today. We just don't rely on the things that are there in the textbook, but whatever is happening around us, from there, the examples and case studies are picked up, and it is shared with the students. So smart student techniques, study techniques, mock tests, live classes, mentorship programs, then notes and short questions, all these things are covered in our institution. So here is a description. I think the same link is provided in the description of this video as well. You can click on it and you can start registering yourself for the video classes. So we offer online classes conducted by proficient faculty members for CSEET, CS Executive, and CS Professional. See, one important thing which you have to note down here is most of the faculty members who teach at Excel Academy are practicing company secretaries and chartered accountants. So that is something which is wonderful. So on one side, they bring their academic knowledge, which will help you in a big way. And on the other side, they also bring you the real world happenings that are taking place, the policy changes, the policies that the government is making, whatever it is. So because they're practicing, they will have hands-on experience on the policies that are changing, and they come to you with all that knowledge. So that is what makes Ekcel Academy stand apart from the other service providers in the market. So this is something which we wanted to tell. Of course, the academy is promoted by CS Alok. He himself is a company secretary, and he is a part of AAA and Co. That's the company in which he is a part of. So all those people come and teach, and that's what makes this academy wonderful. Right. So this was something which I wanted to tell you all before we begin the session. So let us start with today's session. There are a lot of things here. Okay, let me just go to the first chapter so that you all can start discussing. Okay, so now in the previous live class that I had, we discussed the concepts related to demand. I'm not very sure how many of you were there for the previous live session that we had. So what I'll do for the benefit of all of you who have just joined, I'll quickly have a recap of the important things that we discussed under demand, and then we shall start with supply, and then we shall try to understand the concept of equilibrium. So at the end of this class, the aim or the target that we are setting for ourselves is to understand the concept of equilibrium. So that is what we would be learning at the end of this session. To understand the concept of equilibrium, it is important for us to understand the concept of demand and the concept of supply, right? So if you have any doubts, please feel free to leave your doubts in the comment section. I should be able to take your questions and answer all your queries, right? Please make sure that you clear your doubts in this session itself, so that both of us, you and I, would go home satisfied after the session, right? So let me begin. Is there anybody in the student section who has not learned economics in your +1 and +2? If there is somebody, you can leave your doubts or your answer in the comment section. So is there anybody who has not learned economics in class 11 and class 12? Okay. So there is nobody answering. So can I assume that all of you have learned economics? Then it's wonderful. If you've learned, then it makes this session all the more easier and interesting. Okay, so let us start with the concept of demand. So what is this whole concept of demand? So demand is the capacity of a consumer to purchase goods and services, right? At a given time, at given income, at a given price, at a given technology, with the fashion and the trend. So when we put all these things, then we tell demand exists for a good. Generally, we tell that there are 3 conditions that are to be satisfied for us to tell that demand exists for a particular good or a service. So which are they? First one is the consumer should have the desire. This is very, very important. Desire is the root cause of everything, or it's the beginning of everything. So it begins with desire. Second thing, the consumer should have the ability. So what do we understand by ability in economics? In economics, ability is measured in terms of money. So I desire to have a bungalow on the beach side. So what is that? That is my desire. It's a very costly desire. Do I have the money to satisfy that desire? I may have, I may not have. If I do not have the money, then I cannot generate demand for a bungalow next to the beach. Correct? It will remain just as a desire, just as a dream. The last condition is willingness, right? So what do we understand by willingness? Willingness is there are times where we will have the ability, where we'll have the money, but we may not be willing to spend that money on that particular good. Say, for example, Having a bungalow next to the beach is a desire. Very good. So there is desire. To have a bungalow next to the beach, the money required is say 3 crore rupees. Okay. Say that person has 10 crore rupees with him. Wonderful. So he has the ability also. He can spend 3 crores and he can have a house. Right. But is he willing to spend 3 crores out of this 10 crores on a bungalow next to the beach? He says, I stay very far away from the coastal area. Even if I have a wonderful bungalow there, I cannot go and stay there. So I don't think it is a good investment to spend that money and have a bungalow. So he may not spend it. So is there a demand from that person to a bungalow next to the beach? May not be, because he is not willing. So when does demand exist for a good or a service? Only when these 3 conditions come together and when all the 3 conditions are satisfied. What are the 3 conditions? First one is desire, second is ability, and third is the willingness. Right? So this is how we define demand, and the 3 conditions which are required for us to tell that demand exists for a good or a service. Fine, great. I hope you have understood the definition of demand, and you have also understood the 3 conditions which are required for us to tell that demand exists for a good or a service. Let's go ahead. The next concept that we have to learn under demand is the law of demand. A very simple law. I'll quickly take you through the law. So what does the law tell? The law tells that when all things are kept constant, when everything is neutral, it is called ceteris paribus. Right? When price increases, quantity demanded decreases. When price decreases, quantity demanded increases. This is what the law of the demand tells. The law of the demand tells us, let me repeat this, ceteris paribus, when all other things are kept constant, and we are considering only 2 factors. Which are they? The 2 factors are, one is price and other is the quantity demanded. So when we consider these 2 factors, we observe that when price falls, quantity demanded increases. When price increases, quantity demanded decreases. So this is the law of demand. This is very, very, very important for us to remember. So what is happening to all other factors? All other factors are income, right? Then it can be the trend, then it can be the technology. What happened to all these things? All these things are considered to be zero, or it is considered to be neutral, right? And we consider only 2 factors. One is the price and other is the quantity demanded. So what sort of a relationship do we find between price and the quantity demanded? We find an inverse relationship between price and the quantity demanded. This is very important. You have to remember. We can write this in the form of an equation as well. So how does the equation look? Quantity demanded is equal to A minus B into P. So this is the equation for the law of demand. And from this equation, we understand that price is an independent factor. Always remember this, very important. Price is an independent factor and quantity demanded is a dependent factor. So let us summarize the law of demand quickly, and then we can proceed ahead. So the law of demand tells us that there is an inverse relationship between price and the quantity demanded. So in this, we observe that price is an independent factor, whereas quantity demanded is a dependent factor, which is very important. While discussing the law of demand, we observe that we keep all the factors as constant and we consider only 2 factors, which are they? One is price and other is the quantity demanded. We consider only these 2 factors. Hope all of you have understood the relationship between price and the quantity demanded. Yes, Pratiksha, your answer is right. There is an inverse relationship between price and the quantity demanded. Now, can we represent the law of demand in the form of a graph? That's the next important thing that we have to understand. So let us take 2 axes, correct? This we have been studying since our school. So this axis is the x-axis, This axis is the y-axis, and the point where both of them intersect with each other becomes the origin, right? Generally, we have a confusion. Those of you who have studied economics in your +1 and +2 would have faced this. The confusion that we have is, we have two factors. One is price and other is quantity demanded. So in which axis should we consider price, and on which axis should we consider quantity demanded? This is something which we should know. Always remember this trick. The trick is, anything that is representing money should go to the y-axis. Other factor will go to the x-axis. So if you see these two factors, the two factors are, one is price and other is quantity demanded. In these two, what should we take? We should take price in the y-axis. Why is it so? Because price is representing money, correct? And the other factor, the remaining factor, it is the quantity demanded, and that goes to the x-axis. So Pujita has sent a message. She says, x-axis represents quantity and y-axis represents price. Am I right, sir? 100% right, Pujita. Y-axis represents price. Very good. Gopinath Govindraj has sent a message. X is quantity demanded, Y is price. Beautiful. Pratiksha, price is y-axis. Yes, all of you are right. Great. So going forward, when you learn other things, for example, we are having profit. So where should we take profit? Should it be on x-axis? Should it be on y-axis? What is your take? Profit, where should you represent it? Can somebody give an answer? Okay, nobody's answering. Right. Okay, somebody says y-axis. Okay, Pujita says y-axis. Correct. Vyas says y-axis. Beautiful, because profit represents money. Fantastic. One more question. Where should we take total cost? Where should we take total cost? So where should total cost be considered? Okay, again, y-axis. Beautiful. Because total cost is again representing money. So by now you would have understood the concept. The concept is, anything that represents money would come in the y-axis, as simple as that. So going back to our law of demand, like we know in law of demand, we consider only two factors. One is price and other is quantity demanded. So obviously price will go to the y-axis, quantity demanded will go to the x-axis. Very simple. Nice. So now in the beginning, we had discussed that price and quantity demanded have an inverse relationship. So when two factors have inverse relationship, what is the meaning of inverse relationship? When one factor increases, other factor decreases. That is the meaning of inverse relationship. So when two factors, when they have the inverse relationship, when that kind of a relationship is represented or plotted on a graph, we get a line which will have negative slope, right? So how does the graph look? The graph looks like this. From right hand top, the line slopes towards the left hand bottom. This is very important. We have to remember. Most of the time we get confused and we plot it in the other way and we lose marks, or we will not be able to answer the questions properly. So always remember, when there is a negative relationship between two factors, right? Negative or opposite relation between two factors, what we see is the line slopes from the left hand top to the right hand bottom. I'm sorry, this is left hand top to right hand bottom. So this is how exactly the line looks like. So this is how the law of demand is represented in the graphical form. Have you all understood so far? Are you clear? Can somebody leave some messages so that I will have the confidence to proceed ahead? Yes, sir. Yes, sir. Okay, I get 2 messages. Wonderful. Thank you, Pujita and Pratiksha, for responding. Great. So now, if you have understood demand and the law of demand, let's go to the concept of supply. So, yeah, Tamis Mathif is also here. Thanks, Mathif. Vyas also says, clear, sir. Gopinath says, yes, sir. Okay, wonderful, wonderful. Good. Let's go ahead. So here we have the concept of supply. See, demand is incomplete without supply. What does this mean? I demand, say, I need 100 top class graduates to work in my company. That's the demand from my side. Good demand. Any company promoter, anybody who has a company would always look for people who are qualified, who can go and work. Okay, let me change the example a little because all of you are CS aspirants. So let me put it this way. Say my company needs two highly knowledgeable company secretaries. I need 2 of them. Wonderful. So what is that? That is demand. In my city, say, there are no company secretaries at all. So what is happening now? There is demand-supply mismatch. What is the meaning of demand-supply mismatch? Demand-supply mismatch means I need 2 company secretaries, but in the whole of my city, there are no company secretaries, and I'm not able to hire them in my company. So as a result, there is a mismatch between the demand and the supply, and as a result of which the demand can never be satisfied. So that's why I tell demand is dependent not only on price, demand is dependent on supply as well. That's what somebody has written here. Supply depend on market. Yes, demand is dependent on supply. Perfect. Right? Otherwise, demand is incomplete. Demand can never be satisfied if there is no supply. So supply is equally important. Correct? So how do we define this whole thing? Supply represents how much the market can offer. That's very important. So say, for example, somebody is, when this lockdown was on and all that, I don't know from which states all of you are from. I'm from the state of Karnataka. Now slowly things are being unlocked. Last month and before that, we had serious lockdown. So once in 2-3 days, I used to go to the bakery asking for bread. Right? If you have bread at home, it is much safer. So I used to go and ask for bread. So when I go and ask for bread, what is it? It is all about demand. Right? So the baker used to tell me, sir, it all got over by 8 o'clock in the morning. I used to go around 8:30. So then he told me, if you want bread, you have to come before 8 o'clock. So then I started going at 7:30, and then I used to get one pound of bread. So what do we understand here? Supply is all about how much the market can offer. It can be in terms of quality. It can be in terms of quantity. It can come with a condition like time frame. So there are a lot of things which the market considers before supplying the goods. It can even be the price, right? So there are a lot of things. So here, there are 3 things that we consider very important for non-stop supply. So what are those? First one is the cost of production. So before supplying, you will think, how much have I incurred? That's very important. Say, for example, you are the manufacturer of a pen. To manufacture 1 unit of a pen, you incur 2 rupees. So then you start thinking, if I go and supply this in the market, will I be able to recover my 2 rupees first? That's your first goal, because you have invested 2 rupees. So that's the first goal that you will have. So first thing that decides whether the good can be supplied or not is the cost of production. Second factor is the price. What is the price at which the good can be sold in the market? That's very important. Say you have incurred 2 rupees and people are ready to pay 4 rupees for a unit in the market. As a producer, you should be extremely happy. Why? 100% profit. Correct. Investment 2 rupees, revenue 4 rupees. So wonderful, right? So you should be happy to supply. Next one is time frame. When, at what time, for how many months, for how many days, whatever it is. So all these are different factors that are considered by the supplier before supplying the good to the market. So what is supply? Supply represents how much the market can offer. The three conditions are cost of production, price, and the time frame. So this is about the concept of supply. Have you all understood? Could somebody leave a message if you have understood or not understood, so that we can proceed ahead? Okay, have you all followed? Can somebody leave a message, please? Okay, Pratiksha says yes sir. Yes sir, understood sir. Okay, Purna has joined now. Purna R says yes sir. Great, nice. So if you have understood the concept of supply, I think we can go to the law of supply. So what is the law of supply? It tells that ceteris paribus. So it's a Greek term which says when everything is kept constant. That is ceteris paribus. With an increase in the price of a good, the producer is willing to offer more quantity in the market for sale. So what is this? Let us make it simpler so that it is easy for us to remember. Very simple. Price and the quantity supplied. When price increases, quantity supplied also increases. Simple. For example, you are a producer of the pen. You incur 2 rupees to produce it. Market was offering 4 rupees to you all these days. You were very happy with 4 rupees. Now the market is offering 5 rupees. Wouldn't you be happy to supply more? You should be, right? Because the assumption that we make while studying microeconomics is both the producer as well as the consumers are rational in nature. They are not emotional. You as a producer will definitely not go and tell the buyer, brother, don't buy this because I am incurring only 2 rupees. Why are you paying 5 rupees? You will definitely not tell this. Correct? You will tell I am incurring 4 rupees 50 paise and I am getting only 50 paise profit. So you have to pay 5 rupees. This will be the exact reply or the approach of the producers. Because here the consumer's objective is to have highest level of satisfaction, and the producer's objective is to make highest level of profits. Simple. So consumer wants highest level of satisfaction. Producer wants highest level of profits possible. So we consider both the producer as well as the consumer as rational in nature. So whenever the price of the good or the service which the producer is producing goes up, the producer is willing to supply more quantity of that good or supply. Opposite to this, when price falls, as a producer, what will you do? Right? What you will do is you will cut down on your supply. You will keep your goods in your godown and you will wait for the prices to go up. Simple technique. Got it? Say for example, you are a farmer and you have produced, say, coconuts. So today the price for a coconut in the market is 5 rupees. Somebody comes and tells you wait for another 2 days, right? The prices will go up by another 2 rupees, you will get 7 rupees. So what will you do? You will definitely hold back your supply. You will wait for 2 days. If your luck is good, right? The price which is at 5 will go to 7 and you will supply it in the market. So what happens? You will make profits. So what did you do by holding back? What did you practice? You cut your supply. So what do we understand? Price and quantity supplied are directly proportional to each other. Very, very important. Price and quantity supplied are directly proportional to each other. When price goes up, supply goes up. When price decreases, supply also decreases. So this is the relationship that we find between price and the quantity supplied. Have you all understood? Have you all understood? Sure, all of you? Sure? No doubts? Okay, great. Wonderful. Thank you. Let's go ahead. So there are certain assumptions that we make when we study the law of supply. So what are those assumptions? No change in the state of technology. See, what is the role of technology? Technology makes the process of production easier, faster, effective, and efficient. So when technology is adopted, when the rate of production increases, supply also increases. But here, what's the assumption that we make when we study the law of demand? Technology doesn't change. Technology is constant. So if you are able to produce 100 units per day, tomorrow also you'll be able to produce 100 units per day. No change in the price of factors of production. Which are the factors of production according to economics? Land, labor, capital, organization, skills. So these are the things which should come together in right proportion so that we are able to produce the goods and services. Correct? No? So if the price of the land, if the price of the labor, if the price of the capital, if the price of the organization skills goes up, what happens to your cost of production? Cost of production also increases. When the cost of production increases, what will you do as a producer? You will pass that on to the final consumers. You will tell, labor cost has gone up, raw material cost has gone up. So I'm forced to increase the price and I'm changing the price. So who will bear that additional price? It is borne by your consumer. But here, the assumption is there will be no change in the price of factors of production. Land, labor, capital, organization, skills will all remain at the same level. Beautiful. So you need not worry. You need not argue with your consumers at all. Or you need not spend time convincing them why are you charging more. Because you will not end up paying more for your factors of production. No change in the number of firms in the market. Beautiful. Right? If this happens, every producer will be mighty happy. Why? Because if there are no additional firms that are being added in the market, there is no change in the competition equation. The equation of your competition remains the same. So you need not worry. You need not come out with new strategies. You need not think of improving your product, or you need not bring in innovation. You need not do anything because there is absolutely no change in the competition equation. Everything remains same. Is it good or bad? That's a different discussion, right? So we'll not get into that. But what do we understand here is that there is no change in the number of firms. So competition is at the same level. No change in the goals of the firm. A firm can have multiple goals. They might think of increasing the number of products that they have. They might think of increasing their revenue. They might think of increasing their products. They might think of increasing the geographical area in which they are operating. They might think of entering into another stream of business which is unrelated to the present stream of business. So all these are goals of organization. But the goals remain constant. It doesn't change. So there is no change in the goals of the firm. So that's another assumption that we make. No change in sellers' expectation regarding future prices. So I took the example of the farmer. Why did the farmer hold back the supply of coconut? Because somebody told him the price is going to go up. But here, there are no such things. There is no change. There is no expectation from the seller. No change in the tax and subsidies. Very, very important. When tax is levied or when tax is increased on a good or a service, what happens to the price of the good? The price of the good increases. But here, the assumption that we are making is government doesn't change the tax slab. It remains same. Take the example of COVID vaccination. In my city, the hospitals used to charge 850 rupees on the vaccine. Then one fine day, the finance minister of the country announced that the COVID-related vaccines and equipments are being shifted from the 18% GST tax bracket to 5% GST tax bracket. The moment this announcement came from the government, the vaccine prices in my city, which was at 850, was reduced to 780. So there was a reduction in price by 70 rupees. Contrary to this, say for example, the finance minister had told that from 18% bracket, it is being shifted to 26% or 28% bracket. What would have happened to the price of the vaccine? The price of the vaccine would have increased. Are you understanding what I'm telling? So this is how tax plays an important role. Lesser the tax, lesser the price on the final good, greater the tax, higher is the price on the final good. There are two types of taxes. I think all of you would have studied this in your accountancy in your +1 and +2. The two types of taxes are direct tax and indirect tax. But anyway, it is not applicable. Anyway, whichever the tax is, taxes will increase the price of the goods. Then comes the subsidy. What is subsidy? Subsidy is all about the support price which the government gives. Say the price of the good is 10 rupees. Government says, I will give you support price of 3 rupees. It means that the value of the good in real is 10 rupees, but it is now being given only at 7 rupees, right? Other 3 rupees, the government is giving the producer. So whenever government declares subsidy on a good, it encourages the supply. Whenever government levies tax on a good, the price increases and there is a chance that the supply falls. But here the assumption is there will be no change in the tax and subsidy. No change in price of other goods. What are other goods? Other goods can either be substitutes or it can be the complementary goods. So they are other goods for us. So when the price of the substitute decreases, what happens to the demand of the good that you are selling? It falls because people will go for substitute goods. Take for example, petrol vehicle, diesel vehicle. Say petrol vehicle prices fall, whereas diesel vehicle prices remain same. So what will the buyer do? The buyers will leave diesel vehicles and they'll go with petrol vehicles. But here the assumption is there'll be no change in the price of the other goods. Next comes the complementary goods. Take a simple example of coffee or tea. When you think of coffee and tea, we need water, we need milk, we need sugar, we need coffee powder, we need tea dust, all these things to produce them. So if the price of one of those increases, automatically the final price increases and there is a chance that the supply falls, right? So this is how, these are some of the assumptions that we make before we go to the law of supply or the concept of supply. Have you all understood? Have you all understood? You can please leave your comments in the comment section if you have understood the law of supply and the assumptions that we make. So with that, we can move to the next part. Okay, Pujita and Pratiksha are telling that they've understood. Okay, anybody else? Is there anybody who has any doubts? Okay, Matthew says he has understood. Wonderful. Anybody else? Have you got any doubts? Has anybody got any doubts? Okay, Hemashri says yes, sir. So it means that she has understood. Great. Okay, so let us check how the equilibrium works, right? So what is the meaning of the word equilibrium, right? What does it mean? That is something which we have to understand. Equilibrium, in simple terms, is a state of rest, right? What happens in a state of rest? Say, take for example, I think all of you are viewing this class through your cell phones or your laptop or desktop, whatever it is. I'm assuming that all of you are using cell phones. So keep your cell phone on a table or a chair or whatever is there. So you keep it aside, don't hold it, keep it away from you. So when you do that, what happens to that? What happens to the mobile phone? The mobile phone is said to be in the state of rest. Why? It is not moving, right? If you strictly go by the law of motion, which Newton gave, and the first law of Newton says that it is because of the inertia. What is inertia? Inertia is a property of the body which helps the body to remain in the same place until and unless it is expelled by an external force. We'll not get into the physics part now. Now, what I'm telling you is, when something is kept aside and when it is not moving around, it is told that the body is at rest. That is simple meaning of the word equilibrium. Correct. Gopinath Govindraj is giving the right answer. Yes. Similarly, when two forces are acting and when two forces are equal to each other, even then the body is said to be in the state of rest. Let's take an example. Here is a stone, and here there is force that is being applied, and here there is equal and opposite force that is being applied. So these two forces are equal to each other, and this stone doesn't move. So this stone appears to be in the state of rest. So this state of rest is referred to as the state of equilibrium. Did you all follow? Did you all follow? Can you please leave some messages in the comment section so I can be sure that you have understood and I can proceed ahead. Have you understood so far? When two equal and opposite forces are acting on each other, the body, the object, appears to be in the state of rest. Have you understood? Yes, sir. Okay. Can you repeat it, sir? Yes, I will. I will repeat, Pratiksha. I will take demand and supply as an example and I repeat. Then it becomes easy. As of now, you just have to understand this much. Yes, Vyas, I'll be repeating it. Just try to understand this much. When there are two forces acting and when the forces are of opposite direction, then the body is said to be at rest. That's all. That is something which you should know. Let's take an example. Then this whole concept becomes very, very easy. Instead of taking physics example, let us take our own economics example. There are two parties. Who are they? One is the consumer, other is the producer. Very good. Now let us assume that we are the consumers. As consumers, do you want the prices of the goods to be higher or lower? Simple question. I'll repeat it once again for you. As consumers, do you want the prices of the goods and services that you consume higher or lower? What do you want? Lower. Very good. Commonsensical. Fantastic. You want it to be lower. Now let us change the role. Now we are not consumers, we are producers. Now tell me, do you want the price to be higher or lower? As a producer, what do you want the prices of the goods to be? Higher or lower? As a producer, you are selling the goods now. Higher. Very good. Fantastic. Good. Right answer. So what do we understand? Consumers always want the price to be lower. Producers always want the price to be higher. So now tell me, is there a force from the consumer side? Yes. Is there a force from the producer side? Yes. The consumer is pulling it down, but the producer is pulling it up. Correct? No. Producer wants the price to go up. Consumer wants the price to go down. That is why we end up bargaining when we go to the market to buy goods and services. What do consumers bargain for? Consumers bargain for lower price. What do producers bargain for? Producers bargain for higher price. So there is a force from the consumer side. There is a force from the producer side. And these two forces are opposite to each other. Take an example. You have gone to purchase a kg of apples. Good. And there is a producer who's selling apple. Fantastic. So there is a producer and a consumer. The producer says, or the seller says, the price of the apple is 200 rupees. You will tell the price of the apple should be 100 rupees. So you are quoting 100, he is quoting 200. He brings it down to 180, you take it up to 120. He brings it down to say 160, you take it up to say 140. And both of you come to a point and you agree to purchase it. And what would be that point? That point would be 150 rupees. So where did he start from? He started from 200. He brought it down to 150. You started with 100 and you took it up to 150. So at this point of 150, the sale actually happens. The sale actually happens. So what is this point called? This point is called the point of equilibrium. So what is this 150 rupees now? It becomes the equilibrium price. And how many kgs did you purchase? Say at 150 rupees, you purchased 10 kgs of apple. So what happens now? This becomes the equilibrium quantity. So what is the point of equilibrium? Point of equilibrium is a point of rest where the demand is equal to the supply. That becomes the point of equilibrium. So here we have a table, very simple table, very interesting table to understand. Let's quickly check. So what's happening? Price is given in the first column, 100, 90, 80, 70. Price is going down. Quantity demanded is increasing, 5, 12, 18, 12, 25, all that, because the price is decreasing, demand is increasing. What's happening to supply? Supply is decreasing, 50, 41, 35, 28. Why? Price is falling. As a result, supply is falling, but demand is increasing. Can somebody, very easy question, right? Can somebody find out the equilibrium price and the equilibrium quantity from the table that is given here? And can you put it in the comment section? What is the equilibrium price and why is it the equilibrium price? That's the question. What is the equilibrium price? Who can identify? 60. Very good. Equilibrium price is 60. Fantastic. Why is it 60? At 60, quantity demanded is 25. Quantity supplied is also 25. So this price 60 is making demand is equal to supply. Fantastic. Beautiful. So you all understood how to find out the point of equilibrium. Point of equilibrium is a state of rest where the quantity demanded is equal to the quantity supplied at a particular price. So such a quantity becomes the equilibrium quantity and such a price becomes the equilibrium price. I hope all of you have understood all that we have discussed so far. If you have any doubts, you can leave it in the comment section. I'll wait for another minute. If you have any doubts, please ask. Okay. I think there are no doubts. Nobody has any doubts. Wonderful. That's very nice. There are no doubts. Thank you. So this was the objective of this session. The objective was to learn the concept of equilibrium, which we have learned. I hope all of you have understood. So I shall stop the session here and we shall meet again tomorrow, same time, and we will take up another concept and we'll have a discussion. I hope to see all of you tomorrow and we'll continue our discussion on economic and business environment. Right. So shall we stop the session here? Okay, then thank you so much. We shall meet tomorrow, same time, and continue our discussion. Thank you.